The Fibonacci trading tool is one of the important tools you can use to better your trading decision in the market. In this Fibonacci trading course, let's discuss in detail the Fibonacci retracement, how to use the Fibonacci retracement to target the end of a retracement and the beginning of an impulse so that you enter the market at the right time. And also Fibonacci extension, that is a trend-based Fib extension or expansion, so that you know your profit target when the impulse begin and market begin to move all the way to the upside. Where is that impulse is going to end, so that you collect profit at certain point and exit the market. Fibonacci retracement and Fibonacci extension, all of these in this Fibonacci trading course. Watch this video all the way to the very end. Consider supporting this channel by leaving a like for this video, subscribe right now, and turn on the notification for more Forex videos like this one. Also check the channel for other Forex contents. If you look at the Fib retracement tool, you discover that they are of two types. Okay, so I'm talking about the two types. So if you come right here to trading view, you discover that if you click on this, you are going to see the Fib retracement and the trend-based Fib extension. The Fib retracement helps us to know when retracement ends in the market, so therefore it is used for market entry and also help you know where to place your stop loss. And if you look at this very point as well, which is the second indicator right here, which is a Fib based extension. So the trend based Fib extension help us to know target, so it help you know where your next target should be in the market, so it help you collect profit. So take profit formation and exiting the market in profit. This is what the second tool help you to do. So what is the Fib tool all about? Because this is very important. So you can simply put that the Fibonacci retracement tool or the Fibonacci extension tool is used for entry, stop loss, and take profit targets. So it helps you know where to place a stop loss. It also helps you know where to enter and also know where to take profit. This is the basics about the Fib tools, which is the Fib retracement and the Fib extension. So in this video, I'll be dwelling more on the Fib retracement so that you better know how it works, how to use it, and how to use it practically on the chart to better your trading decision. So if you come right here, the first thing is, how do you place this very tool on your chart? How do you place the Fibonacci retracement tool on your chart? Let's say, for example, if market is moving upward, let's say we are in an uptrend, and as we all know, uptrend market move upward, from here impulsive move, retracement, and then the next impulse, retracement, the next impulse. What the Fib retracement does is it helps you know when this very retracement is going to end, or possible areas where the retracement is going to end, so that you can enter for the market to move with the next impulse. We already know that if you enter the market the best time at the end of retracement for a buy opportunity, market is going to move upward, in this case for an uptrend. So for you to use a Fibonacci retracement tool for your trading, first of all, you must define your trend. That's the first thing. Market structure. So you must know the market structure. And let me quickly say this: you don't use Fibonacci retracement tool in a ranging market, that is market that is moving in this formation in the horizontal boundaries. You don't use Fib in this kind of market. It will not work. It will give you false information. Rather, use it in a trending market. If the market is moving upward or market is coming all the way to the downside, this is the kind of market you use the Fib retracement. And this is a quick note about this very tool. So let's go back to work. In this very area, let's assume market move upward and then retrace back down. For you to know the level, you have to use the Fib retracement to know the possible area that this retracement is going to end before the next move to the upside. That is, before the next impulsive move from this very area to the upside, so that you can take advantage of the next impulsive move that is going to happen in the market, because this is very important if you want to take a buy position. So all you need to do is to know how to place your Fib retracement tool, and how to place it is you go right here. I'm on trading view, and you click on the Fib retracement by left clicking, and then you come right here where the last impulse started. Okay, let's assume by this time the market should be forming at this very point, trying to show you sign of retracement. So once you see that sign of retracement coming back down a little bit, that is when you pick your fib retracement and draw it from the last impulse. In this case, this very impulse have already formed, assuming, and then market is already forming this retracement a little bit to the downside. So you can now place your fib retracement from this very point where the last impulse started, from this area, and you draw it to this very point. Okay, that is very simple. So you can expand it a little bit to see it very clearly on your chart. So once you do that, this very tool will be positioned on your chart. The next thing is the levels. If you look at it right, if I expand it a little bit, you discover that the levels are of different categories. So at this very point is the very peak, and from this very area coming back down, start from 0.236. That is, market have possibility of dropping back down to this very level before it will move upward. That is the 0.236 level. And the next level is the 0.382, which is this very point, which also means market have capacity of dropping to this very area before it will begin to move upward. Now, these are not guarantees, okay? And the next level is the 50%, that is the 0.5. Market have capacity of retracing all the way to this very point, okay, and then drop to this very point and then move upward. This is the 0.50% retracement level. Market also have capacity of dropping into this very area of 0.618 before moving upward, and market can also drop all the way to this very point and moving upward. So all these levels are the Fibonacci retracement levels that market have possibility of stopping retracement before it will continue the next impulse. Now, like I said, this is not a guarantee. It's not a must. So what you need to do is you don't use the Fibonacci retracement alone. You can only use it with another indicator to further confirm that this very level or this very area is going to be the real level that market is going to finally pause before it's going to move upward. So these are the levels you have to pay attention to before market is going to move upward, and this is how you read it. Okay, for example, in uptrending market. Now in a downtrend, the opposite. Okay, so if you are in a downtrend, let's say for example market is coming all the way to the downside, so market move impulse, we have retracement, market move impulse, we have retracement, and market move impulse again. So what you need to do is for market to move down, retrace, give you opportunity to sell. For market to come back down so you be in profit, you have to use the fib retracement level. How do you do that? You come right here, you pick the tool by left clicking, and then you come to the last impulse. Okay, the immediate last impulse. Let's assume the market is starting forming this very retracement upward. So if you want to know where the retracement is going to end, you have to draw from the last impulse, and the last impulse, assuming, is this very impulse before this retracement that is forming. So from here, you draw from swing high back to swing low. Remember, for an uptrend, you are drawing from swing low to swing high. So in a downtrend, you are drawing from swing high back to swing low. So you can expand it on the chart so you see where retracement is going to end. So as you can see right at this very point, and if I expand this a little bit, you discover that the market is coming all the way to this very point. And what you need to pay attention to, let's say in this case, is market coming to this very area of the first retracement point, or this very point, which is the second retracement point, this very area, which is the 50% or the 0.618 level, before it can then come down or even up to the 0.786. These are the major levels on the Fibonacci tool. Now, if you pay attention to the market most time, you discover that the markets do not really obey the 0.236 level most of the time, okay? And for market to do that, it means that there are certain levels that need to pay attention to when using the fib retracement, either in a downtrend or market is moving upward. So the levels that I critically pay attention to are these three levels. Number one is the 0.382. Secondly, there's 0.50, that's 0.5 level at this very point, and the third one is 0.618. Market most time retrace within these very levels. This very 0.382 right here, the 0.50 right at this very point, and the 0.618 right at this very area. These are the major levels for me that I consider retracement to end in the market before the next impulse to the downside in the case of a downtrend, and in the case of an uptrend, the same level, this very point 0.382 at this very area, and 0.50 at this very point, and 0.618 at this very area. These are the most important Fibonacci retracement levels that I also pay attention to for market to end retracement before the next impulsive move is going to take over in the market. So pay attention to these levels is very important. Like I said, the Fib retracement level, what it does is it helps you know when to enter the market. That is for market entry, and also give you possible situation where you can also set your stop loss, because if you want to enter right here and then you already see this point of important support, that means your stop loss should be maybe within this area or a little bit below this very point, depending on the parameters or your risk reward they're using to set your stop loss. So this is very, very important. So these are the most important levels you should be paying attention to when using the Fib retracement. I've shown you how to draw your Fib retracement in an uptrend. You draw from swing low to swing high. Then for a downtrend, you draw from swing high to swing low. Okay, once you do that by left clicking on this very tool and draw in that very formation, you're going to get it accurately and it's going to be on your chart for usage. The next thing I want to talk about here is the real practical price chart. If you look at this very point right here, you discover that the market on usdjpy was moving all the way to the upside. So let's say market move an impulsive move on this very price action, and right now, as you can see, market has begun to show us sign that is going to move upward. So what you need to do is to use your Fib retracement level. So as market was forming from this very point, we need to apply our Fib retracement level because this impulse have already formed in the market. So as this retracement is coming in, that is when we need to pick our Fib tool and place it from this very point of swing low to swing high at this very area. Then it's going to appear on the chart. Then we begin to mark out those important level of 0.382, 0.50, and 0.618 on our chart. And pay attention to those levels for market to move upward, because this is very, very important. So what I will do right now is to go and pick my Fib retracement tool from this very area by left clicking, and when I left click on it, I will draw from here, which is on the impulse from swing low to swing high. At this very point, I will expand it, and then if you notice, market come back down to the 0.382. okay, this very point, like I said, is a very important level that I used to watch when I'm using this very tool for market to move upward. So you can see market touch this very area, come back down a little bit into the 0.50% level on the Fibonacci retracement, and then from here we are going to see some bullish sign that the market is going to begin to move upward. So what you need to do right now is not to use the Fibonacci alone. So once you're in this very situation where you want to enter the market, you don't just enter the market because the market come to the 0.382 or the 0.50 and then you just jump into the market. You need other confirmation to further verify and ascertain that this very point is the most important point, and the point that this very retracement is going to pause for the next impulse to happen, because there are situations whereby you can see that the market will come down, okay, let's say from this very point to this very area, and then it seems that the market is going to move upward and then crash back down again to this very level of 0.382, and then look like going to go back up, crash back down to the 0.50% before it will finally move all the way to the upside. So what you need to do to avoid most of this kind of stuff is to use another indicator, and I'm going to show you the indicator I use personally to verify that a certain level is the level that the market is going to from then move all the way to the upside for the next impulsive move. And look, this very concept is not 100%. This work 80 to 85% of the time when you use this very indicator, and that indicator is the stochastic RSI indicator. Look at it right here. So if I pop it up on the chart, it is covered that the stochastic RSI indicator from this very point, market moved down. Look at it right here. Market did not enter into oversold condition. So for me to ascertain that this very retracement have end, that is this very move right here coming down have end and market is going to go back up, I want to be very sure that the market on the stochastic RSI indicator enter into the oversold condition. So once I see that the market enter into oversold condition and the market also retrace up to the 0.382 or into the 0.50 or 0.618 level, then I'm very sure 80% or 85% of the time that the market is going to from here move all the way to the upside. So this is a very important parameter that you need to attach to this very concept so that you better enter at the right time. In this very case, I can tell you that where the market is right now is the best time to enter your position. So once you verify this and you discover that the stochastic RSI indicator is at the oversold condition at this very area, and you've drawn your Fibonacci retracement all the way from this very point to this very level, and you see this on your chart clearly, then it is the right time for you to take a position. Now, before you take a position, there is another confirmation you need to see on your chart. We need to see a significant bullish candle of any type. In this very case, we've seen this very bullish candle right here with a close above the previous bullish candle, and the previous bullish candle was this very candle at this very point. So this candle moved upward close above the previous bullish candle, which is this very area, which signified that there is volume in the market and that the market is going to move upward from this very point. So at this very area, with these three confirmation, I am now sure 80-85% of the time that the market is going to from here move all the way to the upside. So what you need to do is to wait for this very indicator to come out of the oversold condition, crossing the 20% line right at this very point. Once that happens and there is a crossover above the 20% line, then this happened on the chart with this very significant bullish candle, showing that momentum is on the chart. Then the right time to enter the market has now come. So you place your entry at this very point, or you enter with a market or instant market execution, and you place your stop loss below this very point of important support, because from here we are not sure that the market is going to move upward. So you set your entry at this very point, or you enter at this very area, your stop loss at this very point. And most time what I do is to do 1 to 2 risk reward ratio, and your take profit target will be at this very area. But in my next video, I'm going to show you how to use your Fib extension to know your first take profit target. In this very case, I will position it at this very area, that is 2 times my risk. If I enter at this very point, my entry is at this very area, and then my take profit is at this very point. So this is how you use the Fib retracement tool properly. First thing is to understand why you're using the tool, which is basically for market retracement. You know when retracement ends in the market, and therefore, if you know when retracement ends in the market, that means you are entering at the beginning of an impulsive move. And when you enter at the beginning of an impulsive move, it means that the market from there have capability of moving all the way to the upside, therefore making you taking advantage of that very impulsive move very, very early in the market, and this will make you trade ahead of others as well. This is how the Fib retracement tool work when it comes to market retracement, be it in an uptrend, market is moving upward, or market is coming all the way to the downside. You can still apply this tool. The only situation that this tool will not work is when market is ranging. We are in a ranging market. Market is moving between 2 horizontal boundaries of resistance and support level. Don't use it alone. it will not work alone. Use it with other indicator. So you can try other indicator and see it how it works by back testing it. You must not use it with the stochastic RSI indicator, but personally, this is one of the two that I use in line with my Fibonacci trading, and this is very important. It's going to help you if you apply this very concept very well. The Fibonacci extension tool can be used in only two scenarios: if the market is coming back down or if the market is moving all the way to the upside. And I'll be doing a detailed example on the possible situation you can see on a downtrend and also in an uptrend. So let's say, for example, market is moving upward. The main goal of the Fibonacci extension tool is for you to know the exact point to take profit or possible take profit area. Let's say, for example, market move upward and then retracement. You want to enter at the end of retracement so that you catch the next impulse, okay? And you know the possible area where this impulse is going to end in the market. That is the main thing about the Fibonacci extension tool. So when you know that maybe this area the market is going to have another retracement, or this very point we're going to see another retracement in the market, it helps you set your profit target at that very area or within that zone. That is the main thing, the main aim of the Fibonacci extension tool. So this is very important in a downtrend and also in an uptrend. In this very case, in an uptrend, let's say, for example, market is moving back to the downside. So market move down, impulse retracement, and then market is moving downward. So the main thing here is, if market is moving down and then retrace, we want to enter at the end of retracement, because at the end of retracement is the beginning of the next impulse, so that we can enter and move the market with the next impulse and know the possible area this impulse is going to end for the next retracement to come into the market. This is very important. So when you know the possible area the market is going to end the impulse, then you set your take profit target within that very zone, because from that area or within that zone, market is going to have retracement, also giving you another opportunity to enter into the market again. So this is the core basics about the Fibonacci extension tool. It helps you know the area or possible zone for profit collection in the market. The next thing is, how do you pick this tool and how can you draw it on your chart? It's very simple. All you need to do is to come right here to the Fib level. We have the Fib retracement. Right here is the trend-based Fib extension. So you just left click by picking it, and how you draw it on your chart to properly know where that level of taking profit will be is, for an uptrend, you draw from swing low to swing high and back to swing low. Then for a downtrend, you draw from swing high to swing low and back to swing high. I repeat again. For an uptrend, you draw from swing low and to swing high and back to swing low. That is where you started the drawing. And if you want to draw for a downtrend, you do the same, but in this very case, you draw from swing high to swing low and back to swing high. This is how you draw it, and you are drawing it on the last impulse. Let's say, for example, in this very case, market move with this impulsive move to the upside, and then retracement have ended already, and this very retracement end around this very area, about to move the market to the upside by the bulls. And what that means is, at the end of every retracement is the beginning of the next impulsive move. So what that means is, from this very point, market is going to move upward. So we want to take this very tool to show us possible take profit target. So if you look at this very tool, which is the Fib extension, you discover that the first profit target, if you enter this trade around this very area or this very point, the first profit target is this very area. And then the second profit target is this very area if the market keep moving upward. And the next profit, which is the third profit target, is this very point. and the fourth profit target is this very area. Now, if you look at it, they all have numbers. So the first profit target is the 1.618 level at this very point. The second profit target is the 2.618. The third profit target is the 3.618, and the fourth profit target is the 4.236. Okay, these are the different targets of the Fib extension tool, and this is very important. Now, one thing very important here is that for me, I consider the first target very important, because as you all know, most time the market will not keep going all the way to the upside. So I consider the first Fib extension level very important if I am using this very tool for my take profit target scenario. So in this very case, if I enter the market around this very point, let's say for example, and market begin to move upward, I'm going to use this very area as my first profit target, because this is where the Fib extension shows the 1.618 level as the first profit target. That means within this very zone, market is going to retrace and give me another opportunity to enter again for the next impulsive move all the way to the upside. And this is very, very simple. So the best way to draw this on your chart is by coming back to this very point. You pick the tool and you draw from swing low to swing high and back to swing low in an uptrend. And for a downtrending market, you draw the opposite. That is, you draw from swing high, that is on the recent impulsive move, to swing low and back to swing high. This is very, very simple. So in this case, you can see that the profit target is at this very point. This is the 1.618 level and the 2.618 level, which is the second profit target, and the 3.618, which is the third profit target, and the 4.236 right at this point, which is the fourth profit target. So these are the important targets for the Fib extension level that you can use for setting your take profit when you enter a position in the market. Now, let me do it practically on the chart. I am using the USDJPY chart. Let's say, for example, this very market is moving upward. As you can see, markets move from this very area all the way to the upside and then retracement. So if you use the Fib retracement, you discover that this very retracement have ended and the next impulsive move is going to come into the market. So what we need to do is to use our Fib extension level to know where this very take profit target is going to be if we enter this trade at this very point and our stop loss is at this very area. Remember, for an uptrend, you draw your Fib extension from swing low to swing high and back to swing low. So you go right here and pick the trend-based Fib extension and you draw from this very area, swing low to swing high and back to swing low at this very point. So if you look at it right here, you discover that the first take profit target is at this very point of 166.24 on the USDJPY chart. What that means is, let's say for example, I enter a trade at this very point and then my stop loss is at this very area. My take profit target from the Fib extension is at this very point. So this is where I am going to set my take profit target, because this is the level that the Fib extension shows that should be the possible take profit, because when market begin to move upward, this area is a very important point before the market will begin to move downward again. And this is one crucial thing you must have to understand when you are using Fib extension level for your take profit target. The next example is for a downtrend. Let's say, for example, market is moving downward from this point of resistance all the way to the downside. And then there is a retracement before the next impulse to the downside. We want to know where this very impulse is going to end so that we set our take profit target at that very level. So what you need to do is to pick your trend-based Fib extension and draw it on this very impulsive move to know where the next impulsive move is going to end, so that you set your take profit target at that very point. So what you need to do is to go right here and pick your trend-based Fib extension and you draw from swing high to swing low and back to swing high at this very point. And let's say, for example, you enter the market at this very point or at this very area within this very zone, and you set your stop loss to this very point, and your take profit target from the fib extension 2 is at this very point right here. This is your first take profit target, while your second take profit target is at this very point, which is the 2.618 level right at this very point. Like I said, don't always go to the second take profit target. The first take profit target is always okay for you. Most time the market obey and respect the first take profit target level if you are using the Fibonacci extension tool for your take profit target collection. And this is very, very important. So this is how you draw it in a downtrend. I will repeat again so that you better know how it works. All you need to do is to notice the impulse and then retracement have ended. Market is beginning to move downward for the next impulse. You draw from the swing high, which is the resistance, to the swing low, which is the support, and back to swing high at this very point. And then it's going to give you this very area as your first take profit target level. That means you set your take profit target at this very point, your entry is at this very area, and your stop loss possibly is at this very point, and you allow your trade to run. This is how you draw your fib extension level in a downtrend. And the last example here is for an uptrend again. Let's say, for example, if you notice this very market move all the way from here upward, retracement, and then continuation to the upside. What you need to do is to use your trend-based fib extension to know the possible area of profit collection or profit target. Okay, so you draw from this very point, swing low to swing high and back to swing low in a uptrend. So you pick your fib extension tool from this very point by left clicking, and then you draw from swing low to swing high, that is support to resistance, and back to swing low, which is the support level right at this very point. When you do that, it's going to give you the possible level of profit collection. If you notice, this very point is the first take profit level area shown by the fib extension tool right at this point. So possibly you should enter the market around this very area or this very zone. Okay, within this very zone is your entry, and your stop loss should be within this very area right at this point, while your take profit target is at this very point. Now, for these three examples, you discover that the market will always, most time, let's say 80 to 85% of the time, it will always hit the first take profit level shown by the fib extension tool. So this is very important, and this is how you can use the Fibonacci extension tool and incorporate it into your strategy when it comes to profit collection. So this is very important. This is how you draw it, and this is how it works on your chart. And this very methodology work whether you're trading stock or you're trading forex or you're trading crypto, any market. As far as technical analysis is concerned, this very methodology is the same, and it works the same in any market as far as technical analysis is concerned. This is a very important way to collect profits and know the exact point to take profit in the market when you are in a position, be it in a downtrend or in an uptrend, using the fib extension tool. If you like content like this, consider supporting this channel by leaving a like for this video, subscribe right now, and turn on the bell notification for more forex videos like this one. Also check the channel for other forex content, and join our Telegram channel with a link in the description of this video and also in the pinned comment. The 5 golden rules that help me become a better trader, check the video right here. It's going to help you, and when you follow these rules, your trading methodology and your result is going to move all the way to the next level. And support and resistance is a very important concept in trading. So know how to use it, unlearn and relearn the most important approach to use support and resistance in your trading. Check this video out, it's going to help you as well. Thanks for supporting this channel.